Hey, welcome everybody. Welcome back to the Road to Retirement. My name is Chris Anselmo from Brookside Tax and Financial Group, and along with me, my co-horse, co-horse. We're two horses. My co-host Tony Shore.
All right. Well, I've never been accused of being a co-horse.
Well, you've
Uh,
never been a thoroughbred either, but
well, I think what you were doing there is you were going to say cohort. My
cohort. Oh,
cohort.
I was going
Yeah,
to say
I've been called that
co-host. Right?
before. A co-host, a cohort. I'll be one of those, but a co-horse.
Yeah,
I
I don't
don't
know.
know.
I'm not even sure what that is, but
Well, I think it's when you see people in a horse costume and
oh
one's
yeah,
the
right.
front, one's the back. I'm the
Are
co-horse.
you the back?
I'm probably Chris, obviously, in this situation, I would be the rear end of the
Yeah.
horse.
All right.
Well, Chris, great to be here. Thanks for having me on the show
Yeah.
again. It's
Sure.
always fun to get on here and chat with you each week. And usually you bring some great information for our viewers and listeners out there. So I love that. I've been doing good. How about you? In fact, this week we sent our youngest off to college. So I'm officially an empty nester.
Wow.
Yeah.
Good for you.
Yeah.
So our daughter is coming back from the Middle Eastern European nations right now. She's going to be back, I think, this weekend, and then
Wow.
yeah, she went over for the U.S. Embassy sent her over to teach some English in Uzbekistan for a while,
Oh
and
boy.
then she's coming back this weekend, which is good. And
Yeah.
then in a few weeks, she's off to Oxford, England. So
Oh my goodness.
exciting stuff.
Yeah.
So a couple of announcements. We were talking off air. Our son Gino is going to move back from Denver with his
Wow.
fiance,
Oh,
and he's going to join our firm. So we'll put him in the trenches for a while and see how he does, and
sure.
hopefully this will be a good fit for him. If not, he can always move on to something else. But
Sure.
yeah, I think part of it is Denver's just so expensive to live. It's just like it's nice and pretty out there, but you know, the- I saw some study. It's probably about a year ago now. Average cost of housing in the top 25 U.S. cities. So Cleveland was 24 out of 25. Our average housing cost is like $190,000 for an average house.
Mhm.
Denver's was 650
That's
for
unbelievable.
average for an average house. I'm like, well, where do the people at McDonald's will live? People are like, yeah, they live in it, but there's 10 in a house, right? So
Well, sure. Yeah. I mean, Colorado is great, but everybody wants to move to Colorado. It's
I,
been kind
I,
of a
I don't
hot spot.
I don't get why it's so expensive. I mean, other so you have the Rockies to the west,
Uh-huh.
and then there's land from there to St. Louis. I mean, it's not
Yeah.
like like on the west coast, there's limited amount of land because the mountains are there, right? There's only
Yeah.
so much. I don't
Or
understand
the
why it's so
beauty. I
expensive.
mean, the mountains are what draw people to Colorado,
Oh
but
yeah,
the
yeah,
rest of it is just flat that
yeah,
looks like any other state. I mean,
yeah.
it's not, you know, the
And then
mountains are beautiful
And
though.
then skiing wise, we don't have a lot of skiing in Cleveland, obviously, because we're pretty flat. But
Yeah.
there's you know, uh, Peak and Peak for New York's only like 2 hours away.
Sure.
So they go skiing up there. So, okay, so I guess for our viewers, you can see we have a little trailer at the bottom of our show right now. It's called Brookside's Financial Puzzle Solver,
Ah,
and our logo, if for many of you know, it's puzzle pieces. I don't know if you could see it way up there in the top right. I don't know if we have a
it's
bigger
yeah, it's
one up
kinda
there.
small, but yep.
So, over the years, we first started out as a tax firm, and then we added financial services, we added insurance services, we added Medicare, we had, the law firm that does basically Medicaid and um, nursing home protections and estate planning and things like that. So, but over the years, it was really, I'd say it's a struggle, but people didn't realize what all we did. Right? They'd come in for years. Say, oh, I just thought you did taxes because I always get the thing. Well, you know, big deal. You work 10 weeks of the year. What do you do the rest of the year? Like they think I'm just like on vacation the rest of the year, right? Even my brother teases me about that. So anyhow, so we actually came up with this puzzle piece logo that has legal, financial, tax, and insurance is in there, so that when we put it out in front of people, hopefully they'll see it. So one of the things we thought we would do with clients is come up with this flyer, and I'll try and show my screen right now. So share screen. Let me see if I can find it.
There it
Can you,
is.
can you see that? So
Yeah.
so I probably have to do. Let me go back a little bit. At
Yeah.
the top of it has Tony Shore's name on there, but I'm gonna see if I could get to the actual, so I can move it a little bit. Let's see.
Yeah, I can see it. It's filling the thing. You just need to scroll down a little bit.
Yeah. So at the top
Yeah.
of it, so it's our,
Tony Shore.
this is your sheet, Tony. So when clients come in and we go over this, let me see if I can open that up a little more. Now I'll try and open this. Okay, so you can kind of see that in here. Um, we have these different services. So let's say
Sure.
you were a client that came in. A lot of people come in initially for taxes. So we would check off. Okay, we did your taxes, and maybe some people have businesses, and so we check that off for them. And then these are all the other services. Either we say we offer, and you also need before you check out, right? We need to check all these boxes before you check out, right?
Yeah.
So oftentimes people come and do their wills or their trusts, so we would check that off, and as they in managing some of their money would be IRAs, and managing their risks, and as they get older, Tony, we've talked about a lot of shows about doing Social Security maximization. Let's look at that. You're Tony's still a little young for that, but as you're getting closer, as you're in your 60s, you want to try and maximize that Social Security, because every extra dollar you get from the government is one less dollar you have to take out of your own savings, right?
True.
So that all comes in. And as you get closer to retirement, we want to go through these processes, send you through these processes. Look, even if you go through the process and you find out everything's hunky dory, well, at least you got some verification that you're on the right track. But
Right.
oftentimes people, and I'm sure you've seen it with other advisors, people are so busy, say busy living and working, this gets all put on the back burner, and
Sure.
then they wake up and they're 62 years old soon. 62 years old, and they're like, oh, what am I supposed to, what about, did I put enough money away for retirement? What's it going to look like? So these are just the processes. So again, most people probably start with they come in to see us for their tax return, and they don't realize that we do all this stuff. So on our tax folder that we give them with their tax return, this is on the back sheet, right? So this is, you know, th- you know, we're more than just a tax firm. So come back and do the other things. And as they get older, or maybe it's for their generation above them, their parents, that legal section, we talk about wills and power of attorneys and things like that. And we've had a lot of shows on those. The big one right now, and I think we've done a show or two on this, or maybe we need to do another one, is nursing home protection.
Yeah.
Um, I don't know if you could see all
Long-term care.
that. Yeah. And let's see, nursing home protection over here. Um, like, I don't know about in your area, but in our area, it's running about 10,000 a month to keep
Yeah.
someone in a nursing home.
It's
Like, if you're,
between 6 and 12 here,
yeah,
anywhere between 6 and 12,000 a month. I mean, if you're in long-term memory care in a nice facility, it's at least 12,000 a month here.
yeah. So it's frustrating, because I do believe our healthcare system should pay for this, right? People are 80, been paying into the healthcare system for 65 years, and they have no
Yeah,
coverage, right? So, we talked about other
crazy.
plans, but where we see this the most is, I'm doing an estate plan for a client, and I said, look, I know you're even still a little young for this, but let's talk about this so it's out there. How do we, because most of the planning in that area is a 5-year window. So we can't start it when you're 93, so we could, but it's most likely not going to get through the 5-year period. But where it hurts the most is people come in and say, "Oh yeah, we just went through that with my mom." Like, ugh, if you'd have known we did this, we might have been able to save you. I know we'd have saved you something. I know we'd have
Right.
saved you. Maybe we couldn't save it all, but we would definitely save you more than just handing over money. Because the sad stories are like we had to sell mom's house. We spent all her retirement plans. We spent everything for this care, and look, maybe we could have saved some. I know we could have saved some. I don't know if it's half, three quarters, or all of it, depending on when you come in. But um, but they didn't even know this type of planning was available,
Yeah.
right? So because most, put this politely, most attorneys and even the pundits out there on TV and the internet about avoiding probate, avoiding probate, avoiding probate, avoiding probate, avoiding probate. That's all well and good, but those type of trusts don't protect any assets. They do avoid probate, but
Yep.
like lady we're just talking about, she spent it all, right? She's got no money left.
Yeah.
So there's nothing to probate anyhow. So you
Yeah.
didn't really do her a favor by avoiding probate. You should have, there should have been some more planning. But I would say most people, I don't know the number, but the great majority of the people do not know this is available. So, so by putting it on this sheet, they see it. They say, "Oh, what is that nursing home protection?" Well, okay, let's talk about that. And as they get older, and we'd go through the estate plan, I talk about it, and if they say no, so when we have a legal engagement, we have them sign this thing called a client service agreement. Check off all the boxes what we're doing for them, and if they decide not to do that, we have them sign off that we talked about this and you didn't want to do it.
Yeah.
Because when your kids come in and say, how did mom spend $500,000 in a nursing home?
Right.
Chris, you wrote a book on this. How did you not? How did she? I don't want to be like sued for malpractice, but look, mom, we talked about this and she didn't want to do it. And we might even, because of confidentiality and attorney-client privilege, like if she says no, I can't just go to the kids say,
Right.
hey, your mom's because they're not my client and I can't disclose this stuff, right? So
Right.
it is a huge one, but by checking these boxes, okay, what is that box you didn't check for Social Security? What's that all about? Go through the scenario. Look, there's ways to maximize your Social Security. We'll run the report. Not saying you have to do it, but at least you have the information if you want to do it, right? What about income planning? Well, are you going to have enough income when you retire? You're used to making $1,000 a week, and now when you retire, you're only making $700 a week. How are we gonna you know fill that void? So income plan, retirement income. So that's all part of the process. And ideally, you'll end up checking off all these. So we get to the insurances. We talked about annuities on a lot of the shows, how they protect assets. Especially if you get a fixed annuity or fixed indexed annuity, that they're not going to lose any money for you. Medicare, Tony does. Not this Tony, not Tony Shore, but Tony Marlette does
Sure.
our Medicare supplements. So as people are getting to 65, they like you don't really have a choice. You're going on Medicare, right? So you go on the Medicare, and then you know the traditional Medicare only pays 80. This that frustrates me too. So the traditional Medicare only pays 80% of everything, and so how do we supplement the other 20%? And so there's a checkbox there for Medicare. Whether you do an Advantage plan or you do the traditional one and get supplements, the frustrating part for me on that is, and I know why, but because all the insurance companies want the money, but the government's already paying 80% of everything. Why don't they just charge another $100 to everybody and just cover the rest of it, right? Cover the other
Right.
20%. So,
Right.
but the reason being, a little aside is, there's insurance companies that you're paying to cover that 20%. So they want that premium money. The other thing is, all those advantage plans you see on TV, Jimmy Walker and Joe Namath, all them pitching these
Yeah.
advantage, right? So what happens with the advantage plan is the government gives that insurance company Tony Shore's Medicaid Medicare allowance for the year and says, okay, Tony Shore's on you this year.
Mhm.
We're out. Right. So all those insurance companies are fighting for all those that Medicare money, and hopefully, actuarially, they'll win. I mean, it's almost like Vegas, right? I mean, actuarially, you're not going to win in Vegas,
Yeah.
right? If you hit and leave early, but you stay there long enough,
Yep.
they're going to get their money back, right? They didn't build all those buildings on winners, right? So, and insurance companies operate kind of the same way, right? Actually, they put out products, they put out premiums. You know, they have to look, they have to make money, or the whole system doesn't work. So,
Right.
you know, they're like, well, when do you get into the insurance company's pockets? Well, if you get into their pockets too long, they're going to go out of business, right? So actuarially, they're hoping all this works. Like, you know, if they insure 1 million houses and two of them burn down, they can handle that, right?
Right.
But on the long term care side, you know, we talked about on other shows that 2 out of 3 people over the age of 70 statistically will spend some time in some type of facility. So if you insure 3 people, if you insure 3 houses and two of them burn down, that's not working, right?
No, that won't
So
work.
but you need to talk about it, right? And long term care, we have had people buy long term care insurance. Funeral trusts are so Medicaid. If you're trying to qualify Medicaid, will allow you to put away $15,000 per person into these funeral trusts, and they'll still be a protected asset. And I'm pretty sure they do this because they're saying, look, if we don't let them put money away for their funeral, if they're completely destitute, the government's going to have to bury them,
Right.
right? So,
Right.
so, so
Right.
they allow you to put some money away into these funeral trusts. So, those are all things that kind of go into the planning. But again, we kind of did this visually because I think a lot of our clients, even to this day, don't know we do all this stuff,
Hmm.
and don't know they need to get all this stuff done, right? Um,
Well, that's the bigger issue. I think uh, everybody needs each piece of this puzzle taken care of to have the full coverage for retirement and to
yeah,
make sure they're not going to lose money or make costly mistakes. And I think so many so-called financial planners out there, Chris, get people in, and either they're just a stockbroker, and so they just invest their money in stocks, and or they're just an insurance company,
right,
or they just want to do their taxes each year, or they're just an estate planning attorney who are going to do wills and trusts and
right.
just set, to avoid probate
Mm.
and done. But you need somebody who is a financial advisor, who's a fiduciary, who's going to do what's in your best interest. And if you're really doing what's in your best interest, you're involved in all four of these
Yeah,
areas. You need all four of these puzzle pieces to complete the puzzle.
yeah.
And I think that everybody has this financial puzzle to solve. It used to be much simpler. You could do
Oh
it
yeah,
yourself,
yeah.
even, but it's changed over the last 30, 40 years. It's a different than when my parents or my grandparents went through it. With all the tax changes and legal changes and long-term care and health insurance issues now, and the costs of these things, people living longer is a big part of this. Why you need
Yeah,
this.
sure.
So I think, Chris, this is so good that you put this together, and not only that you put this together for our listeners and viewers out there, but that you put a firm together that can handle this.
Yeah, it was. Let's say it was a struggle, but it it's hard to put the firm together, like because you need a lot of licenses. Like
Sure.
you need to have a lawyer, right? Somebody had to go to law school and pass the bar
Yep.
exam, right?
Yes.
And on the tax side, you don't have to be a CPA, but we have CPAs here. The financial side, somebody had to pass securities exams. On the insurance side, somebody had, they had to pass the insurance exam. So, you just can't like take this off the shelf. So, and as you mentioned, a lot of other firms have one or two of these pieces of the puzzle, but they don't have all of them. And the way we look at like taxes are just one part of your financial. All these are parts of your financial picture in the long run, right? It's all dealing with
Right.
your money or your property. Even the legal side is dealing with your money or your property. Um, and some of the mistakes that we see are so egregious and oftentimes cannot be undone. I
Right.
think I think
And but when you say the mistakes you see people come in with after the fact who haven't been
yeah,
working with you are egregious, by that you mean costly.
absolutely. So
That's the
so
problem.
and some of the other firms, even the big boys of the world, they just dismiss and say, "Well, we don't give tax advice." So they just,
Yeah,
we don't do tax. So we had a case years ago when we
and that's
talked
the
about
majority of them.
another show where a client, her and her brother inherited an IRA from their father. And we talked about on other shows when you inherit an IRA, you can't touch the money. It has to go from custodian. So it has to go from, let's say it has to go from TD Ameritrade to Schwab. Like it has to go directly. Like you can't just take the money. There's no 60-day rollover that we have like with spouses. So what happened in this situation, one of the financial institutions sent each of them their checks, and they put it in their own IRA. So there's a lot of mistakes here. First of all, so we tried to undo it. So we called
Right.
the original institution and said, "Hey, this is an inherited IRA. Why did you send them the money? Why did you send them the checks?" And they said, "Because they said to send them the checks."
Oh,
I said, "Well,
jeez.
aren't you? That's the big tax burden, right?" And he
Right.
says, "Well, we're not tax advisors. They said send the check, so we sent them the check."
Oh my
They should talk with their tax advisor before they said, "Send me the check," right? So so we couldn't undo it. And we tried to put it back in the decedent's account and do it the right way. And they're like, "Look, we had to close the account. Like we can't put it back." And so we went to the new institution and said, "Hey, this was an inherited IRA. Don't you know that you shouldn't be receiving checks right from Tony Shore. It should have came from Tony Shore's dad." And they said, this was one of the biggest institutions in the country, right? They like, "Do you know how many checks we get a day? You want us to figure out where they came from? Are you out of your mind?" So we couldn't undo it. And it was like a 40.
Wow.
So they ended up paid $40,000 in taxes that they could have
Wow.
deferred. So
Wow.
yeah, it's just so some of this stuff you can't undo, right? And even in the nursing home protection, like people give away, they give money to their kids, they give money, they put kids on their bank accounts. Legally that's all gifting and all that kind of stuff, and
Sure.
not from a tax standpoint, but from a nursing home standpoint, like that you made a gift that causes penalty period now. But people just like we do this stuff every day, so it's common knowledge to us. But this is not common knowledge to regular. I don't want to say
Right.
we're the irregular ones. How's that?
Sure.
So regular people, Abby Normal. So do you remember Young Frankenstein?
Oh, yeah,
Yeah,
yeah.
he gave
Abby
me an Abby
Normal.
Normal. This just isn't their daily routine, right? So like they know what they do in their lives and their jobs and this and that. But nobody ever talks about this stuff. So we thought, doing it graphically and putting it all on one sheet like this and handing it to you
Great.
when you're doing your tax returns. "Okay, Tony, we did your taxes. Those other taxes don't apply to you unless you have a business. So don't worry about that. But you still got to get all these other boxes checked off."
Yeah, you gotta
So
check the boxes. I love that.
yeah,
And if our listeners out there, viewers, want to get these boxes checked to make sure they're not making
yeah.
costly mistakes, how can they do that?
They can call our office at 440-886-3550 or log on to our website, brooksidetax.com. And there's a calendaring system on our website, so you can actually set up your own appointment and what's convenient to you, and you'll come in. Look, we don't charge anything for you to come in and talk to us, but at the end of the day, if these boxes aren't checked, like whether you do it with us or someone else, you need to get it done. Hopefully, you'll do it with us, but it's so important to get the stuff done because, like we talked about, the penalties are so egregious, right? It's so
Yeah.
costly, and like with the one we just talked about, like they couldn't undo it, right?
Right.
They couldn't just like send the checks back. They're like, "Well, you
Yep.
already cashed the checks. The accounts are closed." I mean, all that kind of stuff that went on,
Sure.
and in their situation, they actually um, put it into their IRA, which you can't do. They're like, well, we did it. I'm like, I understand you. Okay, you did it, but you weren't supposed to do it, right? So not only are they going to pay the tax on 40 grand, but they have to somehow get that money back out of the IRA. And then when they get the distribution out of the IRA, they're going to get a 1099 that they took this distribution out of the IRA. It's just going to be, it's a nightmare, right?
Yeah.
Because the
Yeah.
IRS is going to think you took money out of your IRA, right?
And they're going to tax you again on it.
Yeah, so it's just so
Yeah.
it's not good. So puzzle piece come in. We'll get these boxes checked for you, and at the end of the day, if you become a client, you know, hopefully you do. If
Yep.
not, you can part separate ways, and no harm done. But I haven't seen anyone have all these boxes checked when they came in, right? So
Yeah.
I think we beat that horse, right? That horse enough. So just you got to come in to do it. So
All right.
all right,
Well,
we're
Chris,
we're almost out of time here, Tony.
yeah, great show today, though. Give that number and your web address one more time.
440-886-3550 is the tax and financial number, and brooksidetax.com. And we have a separate law firm for the legal stuff, but that's the way you get a hold of us.
All right. Well, Chris, great show. And listeners, thanks for tuning in. That does it for today's episode of The Road to Retirement with our host, Chris Anselmo.
All right. Well, that went pretty fast. I didn't think I'd have enough to talk about.